Welcome to the Social Lens, and thank you for watching. Today we will be talking about the repo rate and its profound influence on the South African economy. Join us as we uncover the key role this tool plays in controlling inflation and shaping economic stability. Let's get into it. The repo rate is a tool that the South African Reserve Bank, SARB, uses to control inflation. Inflation is the rate at which prices for goods and services increase. When inflation is high, it means that people have to pay more for the same things. This can make it difficult for people to afford basic necessities, and it can also lead to economic instability. The SARB uses the repo rate to make it more or less expensive for banks to borrow money. When the repo rate is increased, it becomes more expensive for banks to borrow money. This means that banks will charge their customers higher interest rates on loans. When the repo rate is decreased, it becomes cheaper for banks to borrow money. This means that banks will charge their customers lower interest rates on loans. The repo rate has a direct impact on the cost of borrowing money for businesses and consumers. When the repo rate is increased, it becomes more expensive for businesses to borrow money to invest in new projects or expand their operations. It also becomes more expensive for consumers to borrow money to buy a car, a house, or other big-ticket items. This can lead to slower economic growth, as businesses and consumers are less likely to spend money when it is more expensive to borrow. When the repo rate is decreased, it becomes cheaper for businesses to borrow money and for consumers to borrow money. This can lead to faster economic growth, as businesses and consumers are more likely to spend money when it is cheaper to borrow. The repo rate is a complex tool, and its effects on the economy can be difficult to predict. However, the SARB uses the repo rate as a way to try to keep inflation under control and to promote economic growth. It is important to note that the repo rate is just one of many factors that can affect the economy. Other factors, such as the global economy, the price of oil, and political stability, can also have a significant impact. The repo rate is set by the South African Reserve Bank's Monetary Policy Committee, which holds a meeting every 8 weeks. The MPC considers a range of factors when setting the repo rate, including inflation, economic growth, and employment. The current repo rate in South Africa is 7.75%. This was the 9th consecutive repo rate hike since November 2021. The SARB has raised interest rates in an effort to cool inflation, which has been above the central bank's target range of 3% to 6%. The current inflation rate in South Africa is 7.1%. The repo rate can also make the South African rand more expensive, which can make imports more expensive. Now, I will try to explain what this means, and what it actually means when people say the rand is becoming weak. The South African rand is the currency of South Africa. When the repo rate is increased, like I explained above, leads to a decrease in demand for South African goods and services, which can in turn lead to a weaker South African rand. A weaker rand means that it takes more rands to buy one unit of another currency, such as the US dollar. This makes imports more expensive for South Africans, as they have to pay more rands to buy the same amount of goods and services. Let's put this into perspective. If the repo rate is increased and the rand weakens by 10%, it will now take 110 rands to buy what used to cost 100 rands. This means that a South African who wants to buy a $100 item from the US will now have to pay 1,100 rands, instead of 1,000 rands. To help illustrate the impact of a weakening rand on everyday life, let's consider the example of a South African citizen looking to purchase a new car. Imagine the desired car carries a price tag of $10,000. When the rand stands strong at 13 rands per dollar, the car would cost 130,000 rands. However, if the rand weakens, the individual would now need more rands to acquire the same car. For instance, if the rand weakens to 20 rands per dollar, the cost of the car would rise to 200,000 rands. This price increase occurs due to the decreased value of the rand in relation to the dollar. It's worth noting that a weaker rand can also have repercussions for South Africans planning to travel abroad. As the value of the rand diminishes, expenses associated with flights and hotel accommodations in foreign countries become more expensive. The value of the rand is affected by a variety of factors, including interest rates, inflation, economic growth, political stability, foreign exchange reserves, and speculation. It is important to note that the value of the rand is constantly fluctuating, and it can be difficult to predict how it will change in the future. However, the factors listed above can give you a general idea of the factors that can affect the value of the rand. As we conclude our exploration of the weakening South African rand, we gain a deeper understanding of its impact on individuals, businesses, and the economy. The value of the rand, constantly influenced by a multitude of factors, reminds us of the intricate nature of global currencies. I hope this video has provided you with valuable insights into the repo rate, inflation, and their implications for the South African rand. Understanding these concepts empowers us to make informed decisions and navigate the ever-changing economic landscape. If you found this video informative, be sure to hit the like button and share it with others who may benefit from this knowledge. Don't forget to subscribe to our channel and turn on notifications to stay updated on our upcoming videos.